Hi guys, welcome everyone to the CoinGecko 8th virtual meetup. I hope all of you can hear us loud and clear. Today we have three really awesome guests. We have Marty Greenspan, founder at Quantum Economics. We have Sam Bankman-Fried, CEO of FTX and Alameda Research, and also Jason Choi, head of research at Spartan Capital. I think today we got a really interesting topic. We have three really great analysts on our show today. So we're going to talk about the state of crypto market in Q4 2020. I think it's perfect time. Everyone's really excited about all the coins going up. Let's get an overall view of the market from each of you. What do you think is happening in the market? It seems to only know one direction, which is up, up, and up.
One of the sort of like clearest, bull trends that we've seen in years. But it's also seemed a lot more concentrated. Like this has been a lot less like, 15 million new people each day coming in and buying their first Bitcoin. And it's felt a lot more like, 20 people each buying like $20 million of Bitcoin a day. And that it's been like, sort of a combination of a few large corporations starting to dip their toes in this space, and then a lot of people really deep in the crypto space themselves.
Yeah, no, I'll add to that by saying I think we started the quarter by seeing kind of institutions start to flow into the space. So we have companies like MicroStrategy pouring hundreds of millions of dollars of their balance sheet into Bitcoin, and you start to have some kind of traditional macro investors start to invest as well. And I think this week there's some pretty clear signs that there might be some retails coming into the space, just looking at the performance of kind of 2017 ICO coins. So yeah, it's been an exciting time for sure.
It's quite strange to see price action only in one direction. We've seen it in Bitcoin before in 2017 when it went from 10K to 20K inside of like 2 weeks. But that was with a lot more hype and fanfare, and this time has been a lot more silent and stealth. We can reasonably assume that it has to do with the halving. That was about 6 months ago, and all of a sudden there's half less Bitcoin coming online every day than there was for the previous 4 years, but also, of course, legitimization by some very major players. And I believe Sam already mentioned MicroStrategy and Square, who have added Bitcoin to their balance sheet. Fidelity Asset Management is now recommending to their clients that they put 3% allocation in Bitcoin. Visa, MasterCard, and PayPal have all announced that they are actively building crypto facilities. As well, we're seeing hedge fund managers and billionaires. I've got a list running, which I've been reading off at the start of every interview I've given. Right now it stands at Paul Tudor Jones, Bill Miller, Stan Druckenmiller, and Anthony Scaramucci. And then just before our meeting, there was actually another one. His name is BTIG Managing Director Julian Emmanuel, who went full on Bitcoin on Bloomberg television this morning. My mouth gaped open. I'm like, seriously? And he's just like saying, yeah, and it's Bitcoin is a manifestation of everything that's been happening in the markets in the last few months, and saying it doesn't make sense to just buy the FANG stocks, and you've got to diversify, and Bitcoin is a perfect asset for that. The list keeps growing, and you can assume that all of these people are on the buy side of books at the moment.
Someone was mentioning to me earlier today that it seems that the Asian and the Western markets sort of don't agree on the price. Like when it's Asian trading hours, the price keep taking a dump, but when it comes to Western trading hours, the price keeps going up. Seems to me like an algorithmic buying from all these billionaires. But I would like to have a take from you guys. What do you think about that narrative?
I basically think that is right, and I think there's a bunch of other sort of corroborating data points to that. One thing, you can look at the kimchi premium, you can look at the sushi premium, Japanese premiums. You can look at like signs of like in specifically Asian markets where things trading, and interestingly, they've been lagging this move. Whereas, for sort of like late 2017, early 2018, they're driving the moves. And so this definitely seems like, a lot less driven by Asian markets. And sort of similarly, you can look at like where has there been like which spot markets have seen like really weird amounts of pumping of particular coins. And the answer is Coinbase has been way up there. There's been like secular trends on Coinbase for like Ripple and Stellar and a few other coins. And so that's sort of like further evidence that this is like looking more like, at least relative to what we're used to, where I think like in general, more volume is coming out of Asia than the West in crypto. I think that like the recent rally does seem to have more of a Western focus.
And do you guys think that the retail is in already? I mean, I can share some stats over here. So I think yesterday I tweeted out like XRP is like the second most, I mean, it's the most popular coin page on CoinGecko. I'm surprised. I mean, it seems like an indicator that XRP guys are in, but maybe Sam, you know some stuff from exchange and FTX, but I'd like to hear, do you think that retail guys are in? XRP is mooning?
Yeah. I mean, I think that like the people who are in are the people who are retail in 2017. And so I think that like, is retail in sort of, but it's not like a huge new wave of people who have never heard of crypto before so much. I think it's sort of like a lot of people who maybe would have fit that bill a while ago. And what is Ripple? Ripple is sort of the quintessential retail pump of 2017 coin. But it's not what I think you would expect retail to get first introduced to in 2020. And so I think that like, and that sort of matches our general sense that like volume's massively up, buying is massively up, every metric is massively up, except actually like new signups are like, they're up, but they're not actually increasing as much as things like volume are. And so that this is looking more like massive activation of people who are already crypto adjacent or already in crypto, as opposed to massive inflows of people who are completely removed from crypto.
I think that we could probably say that definitively. Yeah.
I was just wondering if there's probably an element of almost funds kind of trying to front run the retails. They see headlines like PayPal listing these large caps, and they are anticipating that, okay, the retails might be coming back and buying these coins. So that's why there's kind of coordinated buying of all these 2017 coins. But at least that's one narrative that I've been hearing.
So I want to point out the charts, which are telling us something pretty blatant over here. I mean, this is XRP on the top. I mean, look at this freaking pump. I mean, it went from 25 cents to 80 cents. I think it was up at $1 on Coinbase for a while.
$1?
Yeah, this is an indication of very few buyers. Limited number of buyers actual. So it means that somebody with very large pockets is out there buying the coin. Question is, who is it, right? According to the XRP community, they say it might be SBI, for example, in Japan. But again, according to Bobby, Asia's not as interested as the West right now. It could be Ripple themselves buying up their own supply and trying to take advantage of the current action that's going on in Bitcoin. But certainly Ripple Labs wouldn't be buying Dash and Litecoin as well. That would just be a bit weird, which have seen also very similar kind of price action. Well, not this like blatant, but also we can see those type of rises that have been very, very quick in the markets. I believe that if the narrative is correct, as we've surmised, that it is in fact billionaires and hedge funds that are buying up right now, then bank coins such as XRP and XLM are actually quite well positioned in this rally, because that as soon as they've had their fill of Bitcoin, they're going to be looking around and going, okay, what's next? Generally speaking, these type of bank coins, they're more established. They've been in the markets already 3, 4 years, 5 years. Ripple's been in, Ripple is almost as old as Bitcoin now. And they've been steadily building up partnerships, and they've been steadily working towards their dream. So why wouldn't those billionaires and hedge funds take a look at that logical next step?
Yeah, interesting. I mean, we read the news came out a few weeks ago that Ripple Labs, for the first time in the last couple of years, they've been buying out XRP from the market. That was unusual. Like they've been known to sell XRP to fund their operations every month, but for the first time, I don't know how much it was 30 million or something like that, and that was a big indicator. So it could be right, it could be them buying up furthermore in the market and driving up the price. And I think Sam brought up a point as well. I think we're not seeing like mass retail users coming into CoinGecko. I think it's a lot, like you said, like a lot of people that have heard about crypto in 2017, 2018, and coming back and buying in. I think in terms of like page views at CoinGecko, we're not seeing like the kind of crazy amount of traffic that we saw back in 2017. But I mean, who knows? Maybe 2021 might be the year when things started going crazy again.
I agree. The 2020 rally is not actually anything like the 2017 rally. It's a lot more like the 2016 rally.
What do you guys think about 2021 then? Do you think this bull run will continue up to mid 2021 and 2021? And then any indicator of the length, and how high do you think Bitcoin will run out this time? Maybe from a technical or any fundamental. data that you have? Do you think 30K, 50K, 100K? Everyone's saying a different thing. So I'd like to get your thoughts on this.
I mean, I think all those are possible. I think 10K and 5K are possible. I think it's like, and that's not to say that those will happen, but like, I think that exactly when you think it's impossible for things to go down is a point to like question why you think it's impossible. There's an enormous amount of anticipation and excitement right now in crypto. And I think there's sort of this like really open question of like, what is it anticipating exactly? And will that happen? And I think that like, if I had to tell a story for what it's anticipating, I mean, whatever, some of this is just like random, but like what could happen if PayPal supporting Bitcoin really takes off, right? What could happen if, Revolut and starts really taking off with Bitcoin? What could happen if MicroStrategy starts a real trend and Apple decides to put 5% of their treasury into Bitcoin? And I think that like all of these are sort of hints at like, these are the sorts of things where you can start to tell stories about $1 trillion flowing into crypto, about $5 trillion flowing in. And that doesn't mean it will happen. But I think that a lot of this is sort of, even if this isn't being said explicitly, sort of implicitly what's going on in a lot of people's thinking about this is like, oh, wow, this could be huge. What would happen if, because PayPal has 100 million customers, what happens if each of those, decide that they're going to buy $1,000 of Bitcoin on average, right? Like, what happens if this means that like Starbucks and Subway both decide that they're going to start supporting Bitcoin payments in store, and that causes 5% of all, a cascade, the end of which is 5%.
I don't think they can do that. The transaction times are not supportive of in-store purchases at the moment, not on the Bitcoin network.
They're not on network, but you can imagine off-network transactions where you basically have something like Square, where it's basically on-exchange transactions, right? But like both the, and probably credit cards are involved in this story, where Visa decides that they're going to support Bitcoin payments. And really what that means is that if both a store and the buyer, support Visa, then it's just sort of an interledger transfer, and they true up once a day or something like that. And I'm not saying that's like the best way to do it. Like, you might want to use a faster chain for that. But I don't know, it could be any,
or a centralized database which goes infinitely faster.
Right,
I don't know about you. I don't know about you, Sam, but I can promise you that I will not buy groceries with my Bitcoin. Not now, not never. Not even if they come and beg me. Okay, my Bitcoin is staying in my wallet. They can have my fiat.
Eventually you're gonna run out of fiat, and then you have nothing left but Bitcoin to pay with. No, I don't know. I mean, it obviously depends on your financial situation. That might not be true of you, but it will be true of a lot of people. But anyway, whatever. There's a lot of directions this can go in, and a lot of ways that you can start to see hundreds of billions to trillions flowing in. And I think that's what a lot of this is anticipation of, is finally, either the institutions are coming in droves, or retail's coming in huge droves in a sustained way, or payments are coming, or one of these things. But I also think that means that if none of them come, if like 6 months go by and really just like none of this happens, I don't know, like I sort of feel like there's a lot of people speculating right now. And that doesn't mean necessarily which way things will go next, but it means that like, sort of the default assumption people are making is that probably something cool is going to happen. And if it doesn't, that could be pretty bad.
Yeah, no, I agree with what Sam's saying. I refrain from making price targets, because I think every single person who's gone on Bloomberg and given a price target for Bitcoin could have inevitably end up embarrassing themselves afterwards. So I try not to fall in the same trap. But I do agree that directionally what we're seeing is more adoption, and perhaps not on kind of the retail payment fronts just yet, but in terms of just macro. Kind of TradFi guys coming into Bitcoin and legitimizing it and taking away a lot of the career risk for kind of TradFi fund managers to actually put Bitcoin on their books. I think that's a huge point. That's pretty underappreciated, especially for people kind of crypto native. So we're probably going to see more inflow of capital So to me, the question is simply, do I expect capital to leave Bitcoin or crypto, or do I expect capital to enter? And I think it's a pretty easy kind of answer for me at this point.
Yeah, I mean, it used to be a taboo thing to talk about Bitcoin being in your treasury and all, but I think we've way past that stage. I mean, when public listed companies are holding, like MicroStrategy holding Bitcoin, like millions of Bitcoins in your books, that's like, I mean, no one's going to get fired for not following. I mean, but everyone's afraid of being the first.
Yeah.
Well, the real fun comes, Bobby, when central banks start adding as a reserve asset like they do gold now. I think that's when we see the real arms race.
Yeah, but I don't know. I mean, I think we're not there yet in terms of central banks holding Bitcoin as the part of a reserve currency. Maybe not this cycle. Maybe the next cycle.
No, not yet. When it happens.
Yeah,
it could happen. Yeah, when it happens, that's when the real arms race starts, I believe.
Yeah. What I mean, okay, let's talk about like indicators when the party will stop, right? So what are the things that you guys look out for to have kind of like an early signal that, like this is not going to go up further and like it's time to like sell and like hold a stable coin because the dump is probably coming?
Yeah, I can take a stab at that. So there are a lot of different metrics that we track. So for our fund, we're kind of a long short crypto asset fundamentals fund. So we're more kind of long-term focus and not as, our edge is not in kind of trading.
Let me stop you there a little bit. What do you mean by long short fund? Like maybe I'm sure a lot of other people might not really understand what that means as well.
Yeah, sure. So in equity world, you have kind of long short equity funds that basically do things like pair trades, right? So they look for the relative valuation between different assets. So they could be, they could long Tesla, short Ford, or the other way around if they believe that one is, overly valued relative to the other. So that's one type of trade that we put on. But I think in crypto, because it's still relatively illiquid for a lot of the shorting avenues for a lot of the assets. So I think when people say long short fund, what they usually typically mean in crypto is that they have the flexibility to go short should they want to. And for us, what that allows us to do is to hedge our exposure a bit and allows us to actually go more long on things that we are excited about. So that's basically what we mean by long short.
Thank you. So I mean, back to the question like about some of the indicators about the end of the party.
Yeah, so one thing I was looking at today is this thing called MVRV, which is market cap to realized value. So what people mean by realized value is it's basically the circulating supply of Bitcoin multiplied by a lagging price. And that price they use is the price at which Bitcoin last moved. So it's almost like the value at which Bitcoin was realized. So it's a really strange kind of metric, but people kind of use market cap over realized value to see how, I guess, quote unquote, rich Bitcoin is valued relative to its quote unquote fair value. And there's only 2 data points right now, so it's probably not that reliable, but it has been pretty indicative of kind of signs of euphoria for the past 2 cycles. So that's one thing that I'm tracking along, typical things that I think most funds track, things like RSI, stochastic, moving average Z-scores and things like that.
I'm not sure that the traditional momentum indicators are as strong with Bitcoin as they are with other markets. So, I mean, in 2017, no doubt we saw that RSI just keep getting overextended, and the market just didn't care. This is actually a very interesting question. I had a deep discussion with Bloomberg about it yesterday. One of the things that was a hallmark in 2017, the thing that made me, a bit scared, was when the mempool filled up, and there was just so much activity happening on the Bitcoin network that I felt the blockchain was very close to crumbling. I mean, confirmation times were astronomical, and the transaction fees went through the roof. That's what really caused me to sell out at 10,000. I said, okay, you know what? I don't know what's going to happen next over here, but I'm gonna hold my money outside of this Bitcoin thing. And call me a non-believer or whatever, but it's a technology at the end of the day, and I believe that if we do see that over flooding again or overheating, there does then need to be a cool down, and the best way to cool it down is a cool down in the price. Just because it played out that way last time is not necessarily going to mean it's going to play out again that way this time. And again, if and when we pass that 20,000, there really isn't any further support. So it's just pick a number out of a hat. It could turn around at 22K, it could turn around right now. It would be quite a shame to get all this way and not breach the level. But I mean, it could turn around at any point between now and, I don't know, a million. And anybody's guess is just as accurate as my own.
Yeah, I mean, we've been trying to break past the 20K mark for the past few days, but I mean, we still haven't break past. Seems to be holding quite strong, this resistance level. Okay, let's talk about fundamental frameworks, right? When you look into like maybe Bitcoin or like maybe DeFi coins or any other crypto altcoins, right? So what sort of fundamental frameworks do you use when you do some sort of valuation? Do you look at TVL, total value log, or some sort of comparables between the others, market cap over TVL, or what sort of, yeah, I'd like to hear your thoughts like on how you guys think about valuation for altcoins.
Yeah, I guess I can say that like there's almost like two ways that I think about valuing altcoins. And one of them is something like, you know, let's say that everyone was kind of unexcited about this token. What would be the price I'd be willing to buy it at just because the fucking business is worth more than that, right? And like, you know, at some point, right, with some tokens, at some point you're just like, sure, whatever. Like, I don't care if you like this coin. And I think like exchange tokens are an example of that, right? Like take any exchange token for like a real exchange that has real revenue. And like at some points the buy and burns were like higher than the market cap. And so you're like, yeah, fine. I think that's a good trade. And sort of more to this, you know, extends to other tokens as well. I mean, obviously like DEXs have that property as well. But you know, you can sort of like in general look at some sort of like version of like cash flow divided by market cap. And what does cash flow mean? I mean, there's a few different things it can mean, but one thing I want to make it really clear definitely does not mean is payments to liquidity providers. Payments to liquidity providers do not go to the token. They just don't. Like that's just a different thing. That's just a price offset, changing, you know, maker versus taker price. You know, wealth transfers from makers to takers. And that's not revenue. Like that's a different thing. And that does not contribute value to the token. And so most DeFi protocols right now get a 0 for revenue. You'll see big numbers, those are lies. 0 is the correct number. There are big numbers being paid to liquidity providers to compensate them for doing bad trades. That compensation is coming from the takers as a fee for them doing a good trade, and that's all irrelevant to token holders. What matters is the net fee, which is 0 for most of them. You know, that doesn't work for most altcoins. The number of businesses in crypto that like have real revenue or like a quick path to large amounts of revenue, it's like 7. Like it's just shockingly small. I mean, it's basically centralized exchanges, and like 3 other tokens or something. And so, you know, there's like 1 or 2 right now that I think I just feel like, yeah, fuck it. Like I just, at this level, I will just buy it and I don't care what price it trades at. Because like the buy and burns or airdrops or yield or whatever just makes us worth it. But outside of that, then you really have to look at like, I don't know, what's the world going to pay for this token? You know, like how, and like part of that is the world's estimation of the future cash flow, right? Like part of that is sort of like what you'd learn in an economics textbook, but part of it's memes, and part of it is URLs, and part of it's colors, and all these things that you definitely don't find in an economics textbook, at least not in a dignified one, but that matter a lot. And that like, you know, it's sort of like there are some tokens you're looking at like, how does this have this market cap? The answer is like, I don't know, it does. People want to buy it, so they bought it, you know? And like, if you bought it at a lower price, you did well. And so it's like, it doesn't matter if you say like the business isn't doing anything, who cares? Like token is. And so I think that the other thing that you can think about tokens is just like, how much do people value owning this token? And that's a totally different type of value, which is maybe related, but maybe even not related to like things that you might call revenue. And I think that like, that's a much more speculative play. You know, that's the sort of thing where like, if you bought Ripple 2 weeks ago, you did an amazing trade, and it's really hard to figure out why it was an amazing trade or like justify it. Like, obviously this was undervalued, but it was apparently, right? And I mean, at least marked to now, like whatever, you could have sold it out now. Good trade. And so I think like I think that like that's a much harder to predict and fuzzier thing. If you can get a handle on it, get a handle on what really makes people excited about a token, it's worth an enormous amount. but no formula is really going to tell it to you.
Yeah, I'd agree with that. We spent a lot of time trying to model some of these assets, and for most of them, you can't. There's no cash flows for you to model. There's no real ways to kind of project a fair value on most of the tokens. I'd say the most promising is probably DeFi. I think Sam hinted at the fact that many of these DeFi protocols actually have users that pay millions in dollars in fees. Now, whether these fees actually accrue to the token holders, and in other words, whether you can actually model them as dividend, for the most part, I'd say that it's true for some of the tokens, right? So example, again, not financial advice, but if you look at something like Uniswap versus SushiSwap, right? So Uniswap currently charges 30 bips for every trade, but then all of the fees accrue to liquidity providers and not the token holders. Whereas for SushiSwap, I believe 5 bips of the fees actually go to the people who hold the tokens. So you could theoretically model that 5 bips of fees as a dividend to token holders for SushiSwap and come up with a fair value. But then the second question you have to ask is, do most of the people trading this coin care about that? Right? Do people have consensus around this valuation model? Because if they don't, then you can say that you're right and the market is wrong, but you just lose money. So that's kind of the way we think about it. We have kind of, we're very disciplined about valuing assets, but we have a looser relationship when it comes to actually deploying according to these models.
Oh, just like one thing I'll add on to that is that there's some point at which the token price is so low that it doesn't matter how other people will value it in the future. The dividends alone make up for it. But until you get to that point, then yeah, totally agree.
Well, how do you figure out when that point? What is it at zero? I mean, like, how can it be that low? How do you figure out that it's that low? It's now.
Right. I mean, you could just do like, all right, like, I don't know, let's bullshit how long the world's going to stay like this, whatever, 3 years, 5 years, 10 years. Look at revenue per year, look at market cap of the token. By revenue, I mean actual airdrops on token holders. Divide those and like, see if you're getting paid out more than you're paying for the token. Would be like one thing you could try and do. You'll almost never get a number above 1, but once in a while you will. And I think like at its lowest price, I think SushiSwap was like probably below that threshold. At least it's like really, butting up against that threshold of like price lower than literally the amount of money you get paid to hold it.
So I remember a lot of people in 2018 going, yeah, this token's down 95%. It can't go any lower than that. And then guess what?
99.9% down.
Yep.
I know. I'm back holding some of these shit coins. I just can't sell it because it's worth nothing these days.
Seriously. No, there are no comprehensive valuation models for utility tokens, nor even money tokens. Maybe security tokens, you can figure out what they're worth and what they're attached to on the back end and what ownership it's bringing you. But utility tokens and money coins are both in this kind of gray area. I used to kind of say that it's being constructed, but I don't know that it is. I haven't seen any kind of comprehensive research on people saying how to, here's a textbook, how to evaluate utility tokens. One of our partners in Media Shower actually put together maybe some kind of valuation structure, but it's not going to, at the end of the day, give you like, okay, right now is a good time, or what's the specific price point. Not like it is in the stock market where you can say, okay, right now it's very clear to see that, according to the assets that this company owns and the revenues that they're doing, the price that you're getting per share is a fair price or undervalued or maybe slightly overvalued. Or then you can go, okay, in the next 5 years, they will be doing such and such, and therefore I can extend myself and pay more. In this case, it's all basically made up. I mean, utility tokens basically cost nothing to produce. So you have to really start with, just because there's a utility token out there doesn't mean it even has a value. But the value at the end of the day is going to be the absolute price is determined by the market. So what is somebody willing to pay for it? And if your point is that, okay, I believe that over the next few years, this network is going to grow, and therefore whatever the value the token is trading at right now is going to grow along with that. And I think that's kind of a fair assumption to make, as long as you calculate for inflation as well, right? Because you could say that the network is going to continue growing, but if they're minting 15,000 XRPs or 15,000 Ethereum, what is it now, 13,500 Ethereum every single day, Is that a sustainable? Is that conducive to long-term price increases? I don't believe it is. I think there's a lot of momentum in DeFi right now, but with that high inflation and no hard cap, it's very difficult to call. I'll play the momentum, but as far as holding long term, I don't think we can place a value and say that it's fair, undervalued, or overvalued.
Let's talk about DeFi, right? And this summer we saw like crazy yield farming in the space. Like, I mean, yields went up to like 10,000%. I just saw one today, it's 25%. I don't know how sustainable it is, but I would like to get your thoughts. Like, do you think we'll see these crazy yields again, or is it just kind of a thing and it'll be a flash in the pan and then we'll be over with, like just like the ICO days?
Yeah, I think a lot of the yield farming yields came from the governance tokens being bid up on very illiquid markets. And the misleading thing is people always represent the yields as APY. So kind of they annualize something that probably lasts for a day or two. And I think towards the final tail end of that yield farming craze, sometimes these yields last for literally like minutes. So I don't think that is sustainable. But what we're seeing I think the void that was left by high yields is now being filled by some products that offer different ways to maybe offer some sort of a more sustainable enhanced yields. So you have products that are offering kind of levered yields on liquidity provision for AMM protocols. You have products that are doing tranche lending. So they have a junior tranche that basically earns a slightly higher yield than what you would normally get if you just deploy directly into the capital. So there are ways to enhance yield in a more sustainable ways, but in terms of the 10,000% APY that lasts for a few days, I don't see that coming back unless the market gets crazy again.
Yeah, no doubt those million times percent APY, there's just not realistic, and that's just telling of the immaturity of a market, or there isn't enough activity within it to support a normal market flow. But I mean, 8% or 10%, I mean, it's pretty wild, the fact that the economy is as such that we look at 8% or 10% as high. I mean, 8% or 10%, I mean, that's what people did get in a bank account, when I was, growing up in the 90s. I remember looking into it, lock your money into a CD, you'll get 10% a year. Maybe a bit less, or depending on how long you're willing to lock it up for. The fact that the rest of the market, the traditional finance market, is being artificially depressed by, the central banks and making sure the interest rates are low. I mean, that's the illusion, right? Let's be clear. That's the illusion. Where we are with 8 or 10%, I mean, that's what a fair market value should be, especially when there's risk involved. And of course, a lot of these projects are not going to be worth the risk, because 8 or 10%, but what's going to happen if the contract fails. So you have to realize that whatever money you put there is money that you could very well lose. It's not going to like, we're going to see all of a sudden millionaires and billionaires piling in for an 8% on some crap coin, because they know well enough that there's regulatory risk and contract risk and all of those type of risks involved that just aren't going to make it worth it.
Sam, you are farming a lot with Alameda. I mean, you're one of the big farmers of sushi, and you sort of took over the project as well as one of the multi-sig.
Yeah, and I think that it was quite the summer that we had with DeFi. I mean, it was completely wild. I mean, who knows what the future will hold, but certainly, if I had to guess, what I would say is that what the summer showed was that there's a lot of appetite for DeFi. There's a lot of demand. There's a lot of excitement. I don't think it showed that there's a lot of a lot of great product work, all things considered. I think there's some cool things. I think overall that was a disappointment. And I think that in particular on most fronts, I think we just didn't make progress towards what needs to happen for DeFi to get as powerful as it needs to be to support real businesses. And I really think that's the key test here, is you go to a non-crypto business and they're like, hey, you want to put your shit on chain? And they're like, all right, is it gonna make my business better or worse? They're like, oh, enormously worse, but wouldn't it be cool to be on chain? Right? They're gonna be like, no, I'm gonna pass, thanks, right? That can't be the right answer, right? It can't be like, oh, you're gonna have to scale down by 3 orders of magnitude. Can you find a way to do that? They're going to be like, actually, I think we're going to keep our business off chain. Thank you. and so I think like, you know, but that's where we are, right? Right. Like, it's funny, you just look at all these protocols, and it's like the entire Ethereum network can handle 10 transactions a second. That's not a thing that can support real businesses. But on top of that, like, you know, you look at like the financial tools being built, and like a year ago, you know, there's sort of borrow lending in DeFi, which is super fucking cool and useful. And now there's borrow lending in DeFi, which is super fucking useful and cool. But it's sort of, there's been shockingly little progress on like the really useful financial primitives that are like functioning well enough and built well enough in DeFi. And part of this is just a throughput thing. Like, there's just very few things other than that you can do if you charge $1 every time you click a button. And so I think that like my best guess is that like the medium term future of DeFi is, you know, as much as anything else, it's going to depend really on, do we start building the products that people need, that people want, that are really going to let them, let a DeFi ecosystem become powerful enough that you can keep the things that you love about your off-chain business while getting all the benefits of building on-chain. We're not there. We're not close to there. But I'd like to think that some projects, I don't know which, are sort of pushing in that direction. And that like a lot of the future of DeFi is going to depend on, you know, how that ends up.
I'd like to think that. It's a pivotal statement. The hopium is strong with this one. I think that it's a beautiful experiment, and the capital allocation, the fact that millions or even hundreds of millions of dollars are being allocated within this market is conducive to growth. But there's yet to be any kind of proven model here. I mean, what seems to me, and of course, I'm admittedly a DeFi virgin, though there are a few analysts on my team, several analysts on my team who do it regularly. But as far as I see this, what's happening in a lot of these places is, okay, you lend the platform 1 Bitcoin and they'll lend you back a half a Bitcoin. And I'm going like, why? Like, why don't I just give them half a Bitcoin, right? And just keep my other half, right? Like, why would I do that? I mean, I can just keep my Bitcoin in where it is, safe in my wallet. Or maybe they'll compensate you in some shitcoin, which it might have a value, it might not. And there's an old expression is, you know, buying somebody off with pea soup, right? And when somebody says, okay, I'll give you a shitcoin in order to hold your Bitcoin, my answer is going to be no. I mean, I'm sorry, but no.
Yeah, well, I don't know. Some of those turned out to be worth a lot of money. But also more generally, I think like the typical use case for borrow lending is lending out one asset to borrow a different one. And yeah, I mean, borrowing with Bitcoin is not getting you very far. And some of these were silly. Like, some of these were just like, whatever, you put in something, get out that thing, it's just hyperinflation. It's not doing anything.
Yeah.
But I think some of them were like, you know,
why is that any different, Sam?
Oh, well,
I mean, why is that any different? If it's one for the same or one for a different, I could take half a Bitcoin and I can buy Ethereum with it, and then keep the other half of Bitcoin rather than in,
because it
in a
keeps your
platform.
delta.
I'll keep it in my.
So let's say that you want to be long. It's margin trading is basically the answer. But like, let's say that you have $1,000 and you want to be long $1,000 of Bitcoin because you think it's going to go up a lot. But also you need to pay $100 today for rent. And you don't have $100. You just have your $1,000 of Bitcoin. You could sell $100 of your Bitcoin for USDC or whatever and pay rent with it. Then you only have $900 of Bitcoin, and you're going to make less money if Bitcoin goes up. Also lose less if it goes down. So I'm not necessarily saying you should get leverage long. But another thing you could do is lend out your $1,000 of Bitcoin, borrow $100 of USDC with it, pay rent with that, and now you still have exposure. You only have $900 of net value, but you have $1,000 of Bitcoin exposure. And so if Bitcoin goes up, if Bitcoin doubles, you make it $1,000 instead of $900. Again, if it goes down, you lose more. So
you lose everything, right? I mean,
right. I mean, it's
leveraging.
Right. Yeah, it's a way to get. It's a way.
I could at the same time, Sam, and correct me if I'm wrong, take my money over to I don't know, FTX, and instead of depositing a whole Bitcoin, deposit half of Bitcoin.
Oh, absolutely.
Leverage into
DeFi is doing right now.
I don't understand why would I be.
Oh, yeah, sorry. Everything that DeFi is doing right now is a horribly atrocious imitation of what centralized exchanges far outpaced 3 years ago. Like, it's just hilariously bad compared to what centralized exchanges are doing. But it's on chain, and there's like, you know, at least some people think that there's like some really powerful things that come from that. If you're not interested in that, like if you're not interested, then absolutely, like
I'm
it's
deeply
not
interested. This is why I have analysts on my team who
right,
are
yeah.
I mean, the way I look at this DeFi narrative, this DeFi lending and borrowing platforms, to me they are like an online pawn shops. Like you take your iPhone or your Gold chain and put it in a
You
pawn
did
shop.
say pawn shops, right, with a W. Yeah.
Okay, my bad pronunciation, but yeah, you put them as collateral and you draw out like a USDC loan, so you don't have to sell them if it goes up in value. I think some people do it. It's kind of like why Nexo and Celsius Network exist on a centralized way. People kind of use them so that they don't trigger a taxable event for those who live in countries which have capital gains tax. So they kind of draw a USDC loan and a USD loan so they don't get taxed on those things. But yeah, I thought it was interesting because before that you couldn't really draw out value from your Bitcoin or your Ether if you are generally long, and you can sort of go margin long or without selling it. But yeah, I mean, whatever that you say, you can definitely go to the exchange and sell it and buy back again later. But I don't know, it's just something different, something that you couldn't do before this.
Yeah, and I think that like you know, it's sort of hard to justify. Like really, the justification for DeFi comes in things that don't exist yet, where I basically like. You get a lot of powerful things on chain, and then they can all compose with each other natively, and so you end up potentially getting something that's like more powerful than any one of them individually, because you know you can just glue all these protocols together, and that's something that's like way harder to do with centralized services.
What would be more powerful in your opinion? Say if DeFi, like, I mean, you say you were a little bit disappointed at the start. Like, what would make you not disappointed with DeFi? Maybe in like, I don't know, 2 years time or so.
Yeah. So, I mean, first of all, I want to like have replicas of the things that I like using in CeFi that work about as well. And you're gonna have to make some sacrifices, but I kind of want them to be like pretty small, and to feel like, yeah, this is like, even if I'm not taking advantage of the DeFi aspects of it, this is fine. And that means like an exchange experience that feels fine. But then on top of that, you know, I'd sort of want it to be showing me a lot of things that are really hard to get in other ways, and to give some examples of that, right? Like, you could imagine that, like, I don't know, you have some social network that's integrated with a DEX, and because they're both on chain, you know, there's like, you can trustlessly like type something which causes a trade to happen, right? It is like sort of like one aspect of a thing which like is like really hard to mechanic. You know, without that, you can have money flowing freely and quickly between all of these different systems without all of the sort of like all of this like stuff that gums it up in the middle, right? Like anyone who's tried to send payments in complicated global ways has seen how much of a fucking pain that is. And part of the promise of crypto is that can become clean and simple. And even complex things that involve many steps can just be a single click of the button and just work, instead of like, this is definitely going to fail. Like, there are 12 people who can tell me that I need to call customer support right now, and if any one of them does, my transaction is going to fail. And in DeFi, theoretically, at least that's not true. Like, it does just work. And so I insert this example of, you know, taking borrow lending plus a DEX, and you get a merchant trading DEX. And you don't have to like, you know, keep shuffling things back and forth. You can just all in one transaction, you know, all on chain composable, and that's super cool. And I think that like the thing that would make me really excited is a lot of businesses with a lot of real users, you know, hundreds of millions to billions of users and trillions of dollars all flowing through the same composable on-chain ecosystem, with a number of different applications on it. And getting power out of that, the fact that those can all compose with each other.
So I think what you're trying to say, Sam, is that the DeFi frees us of our overlords, financial overlords. Is that more or less it?
Well, our overlords and sort of our Malachian overlords as well, sort of these like weird overlords we never meant to create in the first place, and that there aren't even people, just like gum in the system. Like, it's not like when I try and like send a wire transfer online to someone and fail, it's not like our overlord's like,
That's so
bad
frustrating.
Sam, don't send a
It's
wire
so-
transfer.
It's so frustrating.
It's like somehow we ended up in a place where my bank doesn't fucking have a way to send a wire transfer online. I have to like call them or email them or go in the store. And if I want to like do more than X dollars, like I only do X dollars a day, and like then what am I supposed to do? I can just like pop money, whatever the hell that is. It takes like 3 days, and it's like this unbelievably annoying system that no
Yes.
one could have intentionally wanted on anyone. But
Just
it's
give me
where
your
we end up.
BTC address. You'll have it in 10 minutes.
Yeah.
Exactly.
Yeah,
Yes, I think we've all felt that. But does it? But
Yeah.
does the same thing apply to traditional finance? I mean, do we get to that point? And if so, how long before I can say, okay, it's going to be easier to use these DeFi solutions than it would be to go to a centralized broker?
Yeah, I mean, it's all theoretically doable. Like we're getting to the point where there's
Not theoretically, like when
Right.
is it going to be? Like, I don't want to know if
Yeah.
it vary. I want to know practically how long is it going to take until it's easier to use the DeFi solutions than it will be to call up my broker or
if
to make a trade through my broker.
everything goes well, 3 months. If everything goes well,
3 months.
3 months. If things go poorly, never. It's not clear this is ever going to happen.
So anytime between 3 months and
Right.
so all
And-
we've ruled out is the next 3 months, basically.
That's right. And basically what I'm thinking is like, I can just think of a series of projects which are planning to launch on Serum in the next 3 months. And if they all do like as good of a job as I'm hoping they'll do, there will like exist a few applications which will let you do exactly what you want to do, all on chain, and it's just going to work well. It's not going to be used by everyone in the world. Like it's not like that's going to take over the world immediately, but it could be a great product that's actually fully on chain. But it's not like there's enormous redundancy in this, right? It's not like there's like 12 different projects, each with a roadmap to doing that sometime the next year. And so one of them's definitely going to get there. And, it runs into hitches. The products are just kind of shitty, and that kills it, or they're great and like no one ever figured out how to get users for it, right? Just like sitting there, and then after a year, everyone's like, "All right, that's kind of silly. Guess no one cares." And so I think like, I'm not sure it's going to happen, but I think that the roadmap for this is like actually not that long, if things break right.
We are running close to the end of our session. Let's ask you guys one final last question, hypothetical question, right? Say you have $1 million to allocate right now to buy coins and hold for the next 3 months. How will you allocate your portfolio? And will your answer change if I say you have to hold these for the next 6 months? Anybody want to take a step? show your bags, guys.
Why would I look? I dabbled in options trading, and then I realized that after the first options trade that I made came to fruition a month after the option expired, I realized that there's no reason to put that type of limitation on oneself. For me, part of trading is about being able to jump in and jump out. If it's a long-term hold, it's going to be Bitcoin at this point. But of course, there's so many other attractive assets out there that I'd go in and probably outside of the scope of this meeting.
Yeah, I don't know if I'm legally allowed to talk my book, so I try to refrain. But I'd say that I guess just to kind of respond.
Yes, you are allowed to. Yes, as long as you are fully transparent about your holdings.
Yeah, but to respond to an earlier point, I guess to come to kind of DeFi's defense, I guess most of my backs are kind of DeFi backs, and mostly they are to do with products that can do things that you typically can't do in CeFi just yet. So while I think Sam's point about how a lot of DeFi products are lackluster imitations of CeFi services is true, there are services that offer something unique. So for instance, if you're a new project, you're trying to launch a new token. If you just do it on Binance, for instance, there's going to be no liquidity from day one unless you pay for a market maker. Whereas if you go on a kind of AMM pool right now, you can theoretically create liquidity. So for instance, I run a podcast called Block Crunch, and I have a token that's literally useless, but it's just it's kind of a gimmick. But if I want to provide it with liquidity, I probably won't be able to list it on an exchange, but I can start a balancer pool right away. So I think things primitives like that enable new use cases are really interesting to me. So if I were to shill a bag, I am pretty excited about things like SushiSwap, Uniswap, and some of the kind of newer products that I've personally been a user of. So like Alpha Finance is one where I've been trying to earn more kind of levered yields on. But obviously, Again, just as disclosure, not financial advice. Do your own research. Don't be an ape.
Yeah, it's sort of not financial advice here. But you know, I'll first give an answer which like doesn't involve sort of like tokens I'm heavily involved in, just because I think like whatever. I think like certainly like a month ago, sushi was probably the answer to that. I think it's just like had enormously bad press, like really atrocious press. Like, I mean, for understandable reasons, did not have a good late summer, like really bad. But on the other hand, it was like the highest revenue project in DeFi. And it was down an enormous amount, and it's just like good to buy. It's just like you're earning more than it cost. It was actually at that threshold. It's up a fair bit right now, and so I think I feel a lot less strongly about that. I think like there's one or two other tokens in which right now I think actually have had some like kind of mixed to bad PR recently, but are like hanging out around that like you should just buy it and hold it for the dividends you'll make money threshold, which is pretty interesting. Outside of those, for things I am involved in, obviously, like I'm sort of bullish on them, and the reason is like I wouldn't be involved in them otherwise, right? Like if I think that Solana was cool tech, I wouldn't fucking be using it, and if I didn't think that like Serum was promising, then I wouldn't be spending time, on it, and same thing with FTT, and so I think like for things heavily involved, I think like in terms of like more sort of like cleaner assets, I think FTT. Just from the perspective of like it's a lot less speculative. This is all speculative, but it's less speculative. I mean, whatever. They like just had like a burn more than $1 million of it this week. And so I think that's just like the case here is not clear. And I think like if you're looking for like this like huge upside things, I think that's more. I mean, whatever. I think they'll upside, but like I think Serum and Solana certainly are on the higher volatility side, as we've seen. I mean, they're both up enormously since the start. They're also down a fair bit from like the highest point they're at. But I think that like if that goes very well, I think that could be like enormously great. But obviously, if it doesn't, like they could decay down. Like that's a real risk there, and they don't have the sort of like proven model, and that means it might not get there. I will pitch one other set of coins though, which I think is kind of interesting, which is I think probably most people feel like at least one of Trump Stay and Trump Go is quite a good hold right now for the next few months. So. Prediction marks on FTX currently have Trump at about 13%.
Yeah,
he already conceded.
I mean, yeah, I think a lot of people feel like maybe 0 is the right number, but whatever. There's
he's literally already allowed the Biden transition team to come.
Well, all I'm saying is that there's currently a top of book bid at 15% for Trump being the next president. On
so
FTX.
Can we short that? I mean, is there a way to bet that Biden is going to? Let me do that.
Yeah. So Trump Dub is the future. You get long or short. And the Trump Stay and Trump Go tokens, you can create a Trump Stay plus Trump Go for like $1, $1 and a penny or something like that, and then sell the one which you think is going down. So both of them you can effectively short.
Yeah, I mean, that was like, I was looking at it like you could get like a 11% return if you hold it for 2 months.
For free.
Yeah, for free. I mean, Trump's effectively no longer the president, but like some people still believe he will be the president. I mean, that's free money. You better take it, right?
Like it to me.
Yeah. All right, guys. Thanks a lot for coming on the Meetup. This is our 8th session. I really appreciate all your answers today. I'm pretty sure the audience here at CoinGecko love all the answers that you share, all your insights today as well. To all of our American friends, I believe tomorrow is Thanksgiving, so happy Thanksgiving to all of you. Have a good holiday with your family. Thanks a lot once again, Sam, Maddie, and Jason.
We came in here. We're this freaking close, man. We're this close.
I gotta say, this looked really hard. Like there are some apes on crypto Twitter who really badly are willing to spend some money to try and get Bitcoin to all-time highs. I don't know how else to put it. Like that's what that graph looks like to me.
Well,
we should hit. I mean, tomorrow, right? All-time high for Thanksgiving.
I'd be happy to join the ape crew along with the list I mentioned earlier. Those are not bad people to be listed among, I'm sure.
All right.
All right.
Happy Thanksgiving. Thank you very much.
Yeah.
Thanks, Bobby.
Thank you.
Take care.